Our next guest, who just returned from a trip to Japan. In studio with us, Patrick Chovanec. He's chief strategist at Silvercrest Asset Management to help us understand Abenomics. Is it really going to work? Is it a game changer for Japan? And of course, Patrick, first of all, welcome.
Thank you. Good to be back.
Since the last, it wasn't that long ago you were here, and we were talking a lot about China. You said, well, I'm off to Japan. We said, great, come back when you get back to New York. But meanwhile, this big deal, potentially, Smithfield, second biggest pork producer in the country, potentially being sold to a big company in China. And I must say, it seems humorous almost to me, but I've stopped laughing because just like the CNOOC deal, when the Chinese company wanted to buy, was it UCal, rejected by the Congress. I could sort of understand it then, oil, strategic, etc. But this is pigs, this is pork. But there are apparently some very serious issues here.
Yeah, well, there's a visceral reaction that a lot of people have because of the dubious reputation that the Chinese have in their own country for food quality and all the food scandals that have emerged there. So the question of, a Chinese company running part of the food chain in the United States creates that reaction. But keep in mind that there are potential advantages here for exporting meat to China. China, because of its concerns about food security, has been very reluctant to import any food, and the United States is a major food exporter. They have opened the door for soybeans, but the door for most other things remains closed. So if this is a wedge, if they feel more comfortable importing pork from a U.S. company that's Chinese invested and Chinese controlled, that may open the door for a lot of agricultural products for the United States to move to China.
Can we look for a lot more of these deals? I mean, the dollar hasn't been incredibly strong. Is it a wonder that we haven't been selling more of our assets, even to the likes of the Europeans, where the euro, also didn't weaken very materially versus the US dollar?
Well, the Chinese have the money. They have $3.4 trillion in reserves. That would be better deployed making productive investments in the United States. That's better for us and better for them than investing in treasuries. But the main hurdle has been the inexperience of Chinese companies. They have not really had much experience abroad. And so that it's the steep learning curve that they face, which is the main hurdle, not the money.
We also got word recently that there's going to be a lot more transparency, at least when it comes to Chinese companies that are listed on the New York Stock Exchange, whose ADRs are listed. Do you believe that? Is that going to happen? Will it help managers here see more inside Chinese companies?
There has been, there's been a looming issue between the United States and China over the past year about audit inspections and access for the SEC to investigate Chinese companies that are accused of fraud. And the Chinese have been stonewalling. Now, it looks like there's some kind of a deal that has been worked out. It doesn't really get the SEC or the PBAOC, which is the entity in the United States that oversees audit companies. It doesn't really get them all of what they want, and it may be a step in the right direction if it is towards greater transparency, or it may fall way short of what is needed. Because, this is not just a theoretical issue. There have been numerous companies in China, U.S. listed Chinese companies that have been accused of fraud that have not really been able to defend themselves against those accusations very well, have either lost significant share value or actually been delisted and are being investigated by the SEC. So this is a very real issue.
On the pork deal, the Chinese government, how important is this to them?
It's important for Chinese companies to go abroad, and it's important to use those reserves that they have accumulated in a more productive way. But I think every deal is important for the Chinese because they have engaged in so few investments outside of, they've engaged in many investments in developing countries, but not so much in developed countries. So it's a big hurdle for them to get over.
So we're just getting started with Patrick Chovanec talking about China, talking about the pork deal, a possible big deal in the making. Chuck Grassley, senator from Iowa, is going to be joining us at 1:15 Eastern. It sounds like he's opposed to the deal. We're going to find out why. Patrick Chovanec continues next.
Let's return to our conversation now with Patrick Chovanec, Chief Strategist at Silvercrest Asset Management. We've been speaking about China, a little bit about the United States. You're just back from Japan, though, and that's, of course, the country in the news today. You were there, in fact, the day the Nikkei dropped more than 7%. I want you to tell us what the reaction was to this 7% drop. Was it panic in the streets?
No, not panic. I think that there was a feeling like the market had gotten ahead of the results. That Abenomics is a work in progress. I don't think you can declare it a success or a failure. But a lot of the run-up in stocks was really in anticipation of positive results from Abenomics, not necessarily the realization of those results.
And then today we got another 5% drop, partially because we got the third, quote-unquote, arrow of Abenomics overnight, the structural reforms. I mean, it's not being accepted very well by the markets, is it, the structural reforms?
But it ran up so much in the first place, right?
Yeah, but I mean, you can't dismiss a 7% drop followed by a 5% drop. That's
right.
Pure correction.
And even though people will say, well, it's still up over 30% from the beginning of the year, you have to adjust that in dollar terms. If you're a dollar investor, even if you're a Japanese investor, because the yen is, the buying power of the yen is going down. So, actually, if you look at a week ago, the Nikkei was outperforming the Dow by about 10 percentage points. Now it's underperforming the Dow by 5 percentage points in dollar terms this year.
Well, it's interesting, though, because speaking of structural reforms, Bill Rhodes, former senior vice chairman of Citigroup, now a senior advisor, every time he's been on the show, Vonnie, that's the thing he has emphasized with you and me. The importance, he says, none of this is going to work if you don't get the structural reform. So your emphasis on this bad reaction to structural reforms does seem a bit disheartening. People don't believe it?
Well, there are economists in the United States and there are economists in Japan, some of them surrounding Abe, who believe that monetary easing is the silver bullet to boost Japan out of its years of stagnation. But when I talk to people in the business community in Japan, they stress the importance of this third arrow of structural reform. And what do we mean by that? And we mean opening to trade through the Trans-Pacific Partnership, particularly opening up agriculture sector in Japan to trade, labor market reform to move away from this lockup of lifetime employment, more to flexible employment, and then even immigration reform, which is interesting given the fact that Japan, we think of it as a homogenous culture, but they're talking serious about immigration reform. Now, there's going to be upper house elections in Japan in about a month's time. Abe is expected, given his popularity, at least until the stock market started tanking, that he would gain a majority in the upper house and that would give him the ability to move forward with some of these structural reforms. And there is a feeling like that, yes, these reforms have been fought off by interest groups for a long time, but that things are really shifting and that they may make some progress.
But is it possible to carry out these reforms? I mean, is the economy strong enough to be able to do it? One of the things that Abe wants to do is reduce long-term unemployment by 20% over the next 5 years. I mean, they are very specific goals.
Yeah, I think part of Abenomics was to give the economy a shot in the arm through this monetary stimulus and then create the momentum to achieve reforms that have been unachievable for many years. And it is a real wrenching transition. But the thing is that Japan's economy has not been dynamic for 2 decades. You've got an aging population. So if you're going to maintain the standard of living that they have, you have to boost productivity, and you need to do something to shake that loose.
But one of the things we've always, if we don't know Japan very well, the interlocked systems they have. I buy shares in your company, you buy shares in mine. There's a disadvantage to a certain extent, but it also creates maybe a certain amount of stability. Is that going to change? And is Shinzo Abe, tell us something about him that would make us or the Japanese believe that he's the prime minister. He's the guy who finally gets this done.
Well, this is what's so interesting because Abe was prime minister before, and he was generally considered kind of a dud. And then when he was reelected, the expectations were quite low. People thought, well, he'll be in office for maybe 9 months, and then some other guy will come along and get nothing accomplished. And he really seems to have surrounded himself with advisors who they have convictions about where they want to move the country. Now, whether those convictions are going to prove correct or not, we'll have to see. But we've seen a lot more dynamism out of him than we expected, and it's generated a lot of popularity for him.
Well, we saw yields back up in Japan too, yields here too in the last couple of days. A little bit more of a serious impact in Japan though.
Yes, and it's a little harder to explain in Japan because in the United States you can say, well, look, the Fed is talking about moving back from QE. That would maybe tend to nudge interest rates up a bit. The economy is at least moving in the right direction, if slowly. So that would also move interest rates up. In Japan, though, you have a central bank which is talking about more easing, not less. You would think that would drive rates down, but in fact, it's having the opposite effect. And maybe it's because people are already working in inflation assumptions into the interest rates and canceling out what the Bank of Japan wants to do. Some of it has to do with internally banks reallocating their portfolios between short-term and long-term sovereign debt in Japan. But it is a worrying sign because obviously it's not having the intended effect that the Bank of Japan wants to have, which is to push rates down.
So much to talk about, so little time. The islands in dispute between Japan and China. What's the latest? It continues to be a concern, but it doesn't seem to be one that bothers the markets much, at least not yet.
It bothers people in Japan. It was actually the number one issue that they wanted to talk to me about, even ahead of Abenomics. Wow. There is real concern among the Japanese, among U.S. officials, that the situation on the ground is very volatile. That it may be off our radar screens, it may be off of investors' radar screens. A lot of people discount it because they say, oh, the possibility of armed conflict is just so crazy, right, between China and Japan, especially given the kind of trade and economic relationship that they have. But the situation on the ground is very volatile. You have boats at sea. You have fighter jets scrambling in the air every day. You have incursions. The Chinese captains out there are overzealous, overtired. They have very loose rules of engagement. They report to multiple chains of command. All it takes, and on the Japanese side, there is some concern in Japan that after these upper house elections, when Abe has more control, that he will take a harder line.
Well, there are Japanese who want to have a stronger military stance.
Yes, and maybe even change the Constitution,
right?
To allow a more military role. But look, all it takes is one mistake. We saw about 2 weeks ago, there was an incident where a Philippine Coast Guard vessel shot up a Taiwanese fishing boat and killed a Taiwanese fisherman. And that led to a big dispute between those two countries. Now, those are minor players, right? And they really can't do that much to destabilize the region. Think about what if it was a Japanese Coast Guard vessel and a Chinese mainland Chinese fisherman who was killed. The implications, and that could happen any day. It could happen any hour.
And because it's not just one little group of islands, right? The worry is that this sets a precedent or overturns a precedent, and then every island off the coast of Japan.
Yeah, there are.
Another country.
Well, there are two things here. The first is that I think people say, well, these islands are relatively useless. So of course, why would the two countries squabble over them? Well, you have to see it in a broader strategic context. This is simply the point of contact between two major nations in Asia that have been jockeying for political and economic influence over the past century. And past point of contact has been Manchuria, Korea, Taiwan. This happens to be the point of contact right now. So it's a regional balance of power issue.
Any possibility that this is also partially what's behind the backup in yields?
Well, possibly, but I don't think that markets have fully recognized the potential for this going haywire. You don't have to have either Japan or China intend to go to war. All you have to have is a situation that spins out of control and puts both countries in a situation where they feel that they can't back down. And if someone were injured or killed on the high seas or in the air over these islands, the riots that could ensue in China could really spin things out of control.
Patrick Chovanec, thank you so much for joining us. We'll look forward to
being
having
with
you back soon. From Silvercrest Asset Management, 1:15 Eastern, Senator Chuck Grassley on Hayes Advantage, Bloomberg Radio.